Joining me now, key advisor, CEO Eddie Ghabour. You know, Eddie, you've been cautious coming into the year, and of course you were able to avoid that real brutal January and February. This month has been a lot better. Is the market getting to a point where now you are thinking about making some adjustments?
You know, Charles, we're actually more concerned about the second quarter more than any other quarter. So we've stuck with our defensive playbook this year, as you well know. We aggressively were buying utilities on the dips, long-term treasuries on the dips. So we continue that defensive playbook. It's worked really well so far, and I think it's really going to shine going into this second quarter. My biggest concern, frankly, is I don't think most investors are protected enough for what we believe is going to be a very volatile second quarter because of how bad the data is going to be. Everything from earnings to margins being compressed and a Fed that says they're going to raise twice 50 basis points. I'd rather be playing defense right here.
You know, it's interesting. I want to pick up on that because the Nasdaq, which is naturally a high beta indice, has been absolutely nuts. We're talking about some pretty wild gyrations. And you can see it here. This is a 1-point move on the upside and a 1-point move on the downside. I mean, almost every day it's taken out one of them, right? Either up or down. And you're holding a stock and one day it's up $8, the next day it's down $9. It's pretty difficult to deal with. I know even in your defensive posture, you must have some positions like that. How do you hold on to them?
So look, I think it's really about how your portfolio construction is. Like Nasdaq, in our opinion, is going to be the toughest place to be over the next few months. Of course, long-term investors, if that's your strategy, you should be able to weather the storm. But how we do that is we take a certain percentage of our client portfolios that we tactically manage based on short-term investment theses. And right now, that tactical strategy has zero exposure to tech. We literally own the opposite of what we owned this time last year in that tactical strategy.
So let me ask you, I mean, I saw this table from Applied Materials. I'm sharing it with the audience right now. I'm calling it the rise of the machines. And here's what's really amazing. Eddie, back in 2015, that was semiconductor demand. That little bitty squid thing right there, it was from human beings. Take a look at where it's going to be just in a few years from now. This is mind-boggling. Human beings, this is us. I mean, Internet of Things, automotive home chips, industrial chips. Don't you have to have some exposure to this? I mean, this is when I see this, I'm looking at $1 trillion. How can I make money on that?
So look, Charles, let me be clear. I'm a long-term bull, as you know. I'm bullish on this country, on the stock market. That's why my parents came here about 60 years ago. But there are points and times in our economic cycle where the setup is so ugly that I think you're going to get a better price point in a few months.
Gotcha.
Long term, they're great plays,
right.
But I'm concerned right now with this short term for our clients.
And I went to your website. I think your motto is growth and preservation, right?
Yes, sir.
That's what you're practicing. I understand. That's why you're such a great wealth manager. Eddie, thank you so much, my friend.